Hi, this is Shane with the Rational Trader. It is the 16th, and we are going to look at, there is a new DLL that's been released last night, so I'll explain that real quick. And we're going to spend the most of today on a tutorial on this new method of avoiding the chop. All right, so in the background here should be running. Yeah, so let's let this go for a minute. One of the things that was requested was to see the action codes even outside of the time range that you've specified to that you're trading. All right, and so I've had that done here actually for a couple weeks now. That's what this little blue number is. So it'll always match the yellow number below it, but once we get outside the time range that I've specified that I want to trade, it'll still print that blue number here, okay, the action code above the bar. And all we've done is we've taken in the predict study, we've just added another subgraph 5, and we don't do anything with it. We just copy the value that we get from the server into that subgraph, and we just leave it alone. All right, the SG3 action, that's the one where we actually will take a trade on. Okay, so that's got some restrictions that are placed on it, and the primary restriction is that you're within the time range you've specified. Okay, other restrictions are things like, well, no, that's it. What we do is if it's outside the time that you've said you want to trade, then we suppress that value. So for SG5, we're not doing that, but then we don't use it for anything else. We're not taking any actions on it. All right, so you'll see once we get to like 9 o'clock here, this is running for the 13th, which is Wednesday. Once we get to 9 o'clock here, we'll stop seeing yellow action codes, but you'll continue to see blue ones. Right, as the system, because the system's making a prediction on, there's a server call on every single bar. All right, we just don't make a prediction until we see a certain behavior, and when we see that behavior, we don't we won't print the code if it's outside the time range. But now, when we get to a behavior where there is a predicted action, it'll print the blue lines here. The blue action code on the top, but you won't see the yellow one because we're outside of the time now. It's not, since I said to stop at 9. Okay, so while we can wait for that to happen, or we can just kind of scroll back here and look at this here. So what's on screen is a lot of colors in the background. Okay, and what we're doing here is we are using a different method to identify that the market is choppy and sideways. And the current method in the current spreadsheet has a moving average in it. It's an 89 period moving average, and then we just look at the angle of that moving average to see, okay, is the market sideways or not? And the problem with that is that it's laggy. You'll get a sharp move, like let's see, let's get a good example here. You'll get a sharp move like this, and you can see the market got sideways right there pretty quickly. All right, whereas the moving average, because this move is so quick, moving average takes a long time before it catches up to, okay, yeah, now you're sideways, stay out. So the idea was, can we get more responsive to the action? All right, so that's what this is doing here. And we'll talk about the logic and how it all works today. Okay, so when you see it black like that, the black background, the normal background, that means the there is no restriction. Just the market's not choppy is basically what it's saying. Getting back to our codes here. So the new DLL, do you see that code right there, 113? The old way, you wouldn't print anything. So you'd have no idea, was it smart or not smart, or was it beneficial or not beneficial to have stopped trading at 9 o'clock. All right. So that's the primary, that's the biggest difference in the DLL that got uploaded last night. Okay, is that you have access to the code now regardless of the time ranges that you've specified you want to trade for. Okay. All right, so let's get back to this now. When we typically think of choppiness, we think about the market has no direction, and we want to stay out. And you typically need 4 points before you could make that decision. So one, if we look up here after this sharp move, you need that point, that one, and that one. So if you got those 4 points, you as a human can look at that and go, okay, that looks sideways now. And we actually see this quite a bit, right? A sharp move, and then it chops around a bit. And so the idea was, well, why don't we just do that since we have that data? And the machine learning prediction study has that data of all these points. So rather than rely on this 89 period moving average, it's really laggy. Let's just use that. Okay. And so what I did is I actually broke it up into two separate views, a long view and a short view. And so I'm not looking for choppy conditions stay out completely. I'm looking for a level's been established, and I don't want to go in that direction until that level is either broken or I'm far enough away from it that it's safe to get in, because if I test that level, I'll be at scratch. Okay? So let's state that again. As I set these 2 points, they're close enough together in distance, right? They're 1, 2, they're 3 ticks apart. As soon as I see that, I go, okay, that's a level that I need to either get far enough away from or break through before I'll take a trade. Okay? And so there's 2 things that you get to specify. One is, well, how far apart does this, or how close do these need to be in order for you to consider it a level? Okay, like this is 3 ticks. That's really close. All right. And how far away do you have to be before you'll consider taking a long? Okay. And I think these values will probably adjust as the market volatility changes, because we've been dealing with pretty volatile markets, and so I've got the numbers set fairly big as defaults. So currently, what you see happen here is, the market moves up. This is before the open. We set that point here. We set that point here, and this point gets set when that bar finishes. All right, so you'll see the blue background starts right there. The blue background means I cannot take a long because a level's been set. And that blue background is going to stay there until I set a new level that's far away from this previous one. So if this point was far away, then, okay, I could now take a long. Whether it's far away lower or it's far away higher, I don't care, as long as I know we've reached, we're outside of that the edge that this range is establishing here. Okay, or I'm far enough away that I figure it's safe to get in because I'm going to go back and test that level. Okay, so what what we see right here is that on this bar here, we go blue. Okay, now it changes to purple, and that's because, in fact, let me turn off. Oh shit, I don't want to do that. It goes to purple because we also set a low level. Okay, so that's what this point is. We set that point, and as soon as we set that one, well, now we've got a level down here. Okay, so there's a level to the high side, there's a level to the low side. And so I very clearly have a range now that I just want to stay out of until I break through it. All right, and so it goes purple because we're drawing blue for, I've got this high side level, and we're drawing red because I've got this low level, and when you put red and blue together, you get purple. All right, and so this area here, this purple area says, whoops, wrong one. I grabbed the wrong one. Purple says I won't take longs or shorts in this zone. Okay, so let's just walk through what happens and how it shifts and changes, and that'll help you understand the logic if it's not clear. So at this point in time, on this bar, we established a low level also. All right, so now starting from this bar here, we won't take a long or a short because we've established a high level and we've established a low level. Okay, and they're pretty close to each other. All right, this wave is like 25 ticks or so. Okay, so we have to either break out of one of these. In this case, we're going to have to break out in order to do anything. Sometimes you'll set a range that's really big, and that's okay. Then we'll start taking longs down here, okay? Because this distance is enough. This distance here, not this distance, 30 ticks or whatever. And you get to set that. I'll show you that in a minute. But in this case, it's pretty clear. The market's chopping in a 25 tick range. Don't do anything, okay? And so what happens is the market breaks lower here. But you'll notice that it stays purple. In other words, we continue to go, I won't take a long. Now the question is, well, why? Why is that? And the answer is that you didn't get far enough away from this level. Okay, so let's see how far it is. From this point. Right? This bar closes at 36 ticks away. Now I have it set to 40, which might be too big for this day. I don't know. Certainly in the volatility we've been dealing with, it's not too big a number. But that's why. Okay, you didn't get far enough away from here to say, okay, it's safe to take a long. All right. The next bar closes at 33, 29, 36. So this is why it stays blue. All the way through here, it stays blue. All right. All the way through. It keeps going all the way to the edge, way out here. Okay. But let's look at what happens though, because we set another point here. Okay. As soon as you set that point, things evaluate again. All right. But I did that in the wrong chronological order. I'm sorry. Because what actually happens next is you set this point. All right. And this point here is far away from that one. Okay. And so it's clearly not part of the edge of a boundary, right? So what I've said is it has to be within 10 ticks to consider it part of this boundary. It's more than 10 ticks, so okay. When we set this level, when we set that point, we go, okay, we'll take shorts now. Okay, but we don't actually set that point until this bar. Okay, because it takes 20 ticks to establish that the market's reversed. Okay, so that's why it goes blue here, this area here, because the reds have gone, the red I won't take a short has gone away. So from here, I'm willing to take shorts if they show up in here. All right. What happens though is we set a new top and then a new bottom. Okay, and then another new top and a new bottom. But let's look at this one right here. This is the one that happens next chronologically. At this point, if a short showed up, we'd take it, because this point and this point are far enough away from each other that we don't believe we're chopping sideways to the downside anymore. Okay. But what about this point here now? Why are we still blue once we set that point? And the answer is we're looking at the last 2 points to the high side. What is that distance? That distance it's less than 10 ticks if we use the calculator tool. It's 9 ticks. And so because of that, we go, okay, no, this is still part of this same boundary that the market is set. Now, I chose 10 ticks. You can choose a different number, but that's why it says, okay, no, you're still choppy to the high side. Don't take a long trade. And it gets worse there. Once that point gets set, that's even closer, right? And even here, if you look at it, these points are all within, this is what, 7 ticks now. Okay, so that's what's going on here. Is it because we just take the current point, the high wave, and we compare it to the previous one. And if it's within X amount, where X you define, but I've defaulted it to 10, then it considers that a level that the market is respecting, and you can't and don't take a long until you're far enough away from that level to the downside that it's safe to get in, meaning if that level gets tested, you'll get to scratch, or you break through it. Okay. Now, here, because this point here was far away, we were willing to take shorts once we established this point down here. But then we established this one, okay, and that's within 10 ticks of this point. So this arrow here, the red one, and this one here, okay, they're within 10 ticks of each other. And that's pretty easy to see just by drawing that line. But you can also use this cool calculator tool they have and do that, and you can see it's 9 ticks. And so because of that, as soon as that point is set, which happens on that bar, we go back to I won't take any shorts. And so now we're still no shorts, no longs, because all of these levels are close to each other. Here, okay. So that's the basic logic. The first thing to understand is, okay, well, when I look at the peaks and valleys that have been set by the market, how close are they in price? Okay, and Peter, I'll answer your question a little bit later. All right, so I could make an argument, and I think Michael made this argument, that this is a series of higher highs and lower highs, and you shouldn't consider that chopping. And I don't agree with you, Michael. And the reason is that it's only like this because I've got those values set pretty big, because we've been dealing with a lot of volatility. When the markets are quieter, you're not going to go 10 ticks and 40. You're going to go something like 6 ticks and 30 or something, and then it'll change. In the current volatility, this is sideways. I agree with what the system is doing here. All right. Now, because we set this point and it's high, it's far away from there, we go, okay, well, we don't have a low side level, so I'll take shorts now. And this is where it seems a little counterintuitive. This is, I think, what Michael was keying off of, is that well, it seems like we ought to be considering longs. Or what happened to my here we go. It seems like we should be taking longs because of this lower high, higher highs and lower highs. And you're missing the point. I'm not trying to identify trends with this. I'm trying to understand when should I be staying out of the market, either to the high side or to the low side. So if you see this and you go, oh, well, I think that I should be taking longs, fine. Go adjust the settings so that you see it the way you like, and we'll do it in a minute. I want to go through the action codes that came up first. We'll start playing with this to see what happens. All right. Ultimately, we'd like that adjustment to occur automatically, to dynamically adapt. I don't know how easy or difficult that will be. It's the kind of thing that we want to use the machine learning system for. All right, so at 6:35 here, we're willing to take trades now, just our normal deal. All right, so we get a 251. That's a short. So the market's breaking higher here. The prediction is short. The chop avoidance system says it's okay to take shorts because the last 2 points were far enough away. There is no level there that says you have to respect this level. There's no boundary. There's no edge. So we take that short and take a 5-tick loss. Okay. And then what happens is, because this level is more than 10 ticks away from that one, we'll now take longs. Okay. And that point gets set on that bar, so it opens up the next bar. It opens up for trading. All right. And we actually get a I can't read that, 134, 154. It's a pullback code. And so we get long right there. And it's the same thing, the market is actually still choppy here. And so we we get 10, move the stop, take a 5-tick loss. In the meantime, we've set that level. So we're back to red, no shorts. And then once we set this point here, we're back to choppy, no longs, until we finally break out. All right, the market breaks out there. Now, this is where it gets ugly and why some people are unhappy with what happened here on this day, because that's a 154. That's a nice entry long on that move. Okay, so there's a very clear prediction to get long, but the system says you're not allowed to take longs, and very clearly it's because those levels have been set right there. Okay. Now, if you don't like that, that's too bad, because the system, what we're doing here is avoiding chop, and that's clearly choppy. And if you don't think that's choppy, then we disagree on what chop means. Okay. We get a 287 here that ends up. What do we take? Seems like we should take that. That's in the too aggressive category. Same thing with the 174. Okay, then we pull back. So now we're free and clear now, right? So why did we go free and clear? Shorts and longs, and the reason is we cleanly broke out here. All right. What I require is 2 times the level you specified as the boundary amount. Okay, so once you're out 20 ticks, then you can take longs. For the shorts, we specify how far do I have to be away from that point before I can take a short, and I have it defined as 40 ticks right now. All right, so that's, as soon as we get to both of those, you can take longs and shorts. I get the long right there. I would have taken a short or a long anywhere in here that's on my list, right? My list right here. My list of action codes. Okay. As it happens, I got the 141 break right there. Members that are using the old spreadsheet, they caught this long here, right? Which is really nice. I missed it because of this chop avoidance business. All right. And then I think they also would have caught this as well. It's the same trade. So I had members that were really happy this day because they caught 2 really nice trades. And then, do you see what happens here? So we peek out. Really a tough top to catch. I might get a signal there. Fall hard, clearly not choppy. I don't think anyone would disagree with that. But then we set that point. And we set that one. And as soon as we set that point, we're now, okay, there's this level you got to respect. The lows are still, you're still making lower lows here. Okay. But as soon as you set that one, then we go red, which is why that's red. Okay. All right. And so what is supposed to happen, and what I've been testing here to make sure it does happen, is that if I get a long, when I'm not allowed to take it, I don't take it. And that works as expected. In this particular case, it worked against you. So here, if it's purple, no trades. If it's blue, no longs. If it's red, no shorts. Purple again, neither. Blue, no longs. Black, so no colors. You'll take any direction. Okay. Now, you define this in the spreadsheet using these 2 values here. And I have to take a drink. So this top one is I couldn't think of a good name for it, but it's the filter that describes how far away do these points need to be in order to be considered the edge of a range. Okay, so I have it set for 10 ticks. The other value is the height of that range. How high does that range have to be? Or rather, how far away from that level do I have to get before I'm interested in taking a trade? All right, so let's play with those values and see how they change. All right, so like we had a case here where, let's look at this one right here, Alt 2. So these 2 values they're 8 ticks apart. So let's change this to like 5. Okay. So now they have to be within 5 ticks of each other in order to be considered a range. In other words, the restriction is hang on. The restriction we're more strict. Okay, so we change that to 5. We're going to have to recalc because this is in the spreadsheet, so we have to recalculate the spreadsheet. Our expectation is that this will no longer be considered no long territory because this is more than 5 ticks. All right, so let's recalc. And you see what happens is as soon as this point gets set here, the red goes away. So that point gets set on, it's actually this bar. So then, now the blue goes away and I can take longs now. Okay? Because we got more strict on what do we consider a level. All right? So what I noticed is that, in the volatility we've been having, if you get too tight, then you're working against yourself. And I used 10 ticks because that's just 1 bar. It's just kind of a starting point. The other factor is, okay, well, how far away do you have to be before you consider that it would be safe to get in that direction? Because let's take this here as an example. All right. How far away do I have to be from this level before I'm willing to take a long, knowing that I'm likely to run into trouble right there? How far away do I need to be? Okay, so I have that set to 40, which is why it stays blue for so long here. Okay, so let's change that value and watch what happens. All right, what is this height here? Oh, 2. That height is 25. Let's change it to 30. And what you'll see happen as soon as this move here crosses the 30 tick barrier, it'll say take longs. All right. So let's change this to 30. And I don't know what the best values are. I didn't have a chance to do all that testing. So we're going to recalc now. Our expectation is that some of this blue should go away sooner, because this we're getting far enough away from this level right there. All right. So recalc. And you can see how it went. The blue went away right here. Okay. And it stayed away here. It came back there. Okay. Yeah, because the previous bar. So if we look at this, Alt-2, this bar here is closing within 30 ticks. It's 29 ticks. And so the next bar says now you're chopping again. All right, that's why you get that stripy business because you're far enough away and then not far enough away, far enough away, then not far enough away. Okay. So Larry has a good question, and this 154 here, the current method uses this moving average. I'm going to lose all the codes when I do this, but so there's a 154 right here. This is what we're talking about. Let me do this here. All right. So the question is, well, doesn't the current method keep you out of this trade as well? And I don't think so. I think there's enough of an angle here that it's going to say it's okay, because the current method uses an EMA and looks at the angle of that EMA, and this is clearly angling up. Okay, so that's the debate that Michael and I were having. So let's look at that. So here's that moving average. All right, it's right here. So we'll bring that up. It's this pink line down here. Okay, and if that angle is enough, then it's going to say no, it's okay. You can take that. Our problem is that it takes too long for that to flatten out after these sharp moves. In this case, I believe it's just barely enough that it says okay, it's okay to take it, and we can see that by looking at the study angle. So this value here is what we look at in the current method. The current method says, is the angle of this moving average more than 4 or less than -4? All right, so if I put a line down here at 4, you'll see. Well, we can just do this here. We can look at it right there. It's just a hint more than 4 in this case. So that's why members took that trade. Actually, it's more than that. It's like 5.5. And again, so that would be the advantage, right? Is that you've got this ugly grindy stuff here, but there is an angle there. There is a direction. You are sideways to higher is how I would describe that. Sideways to slightly higher. That'll let you take longs, and shorts for that matter. The way that system works. Okay. The big question is, if you compare the old method with this new method using the settings of 10 and 40, which one is better? And it kind of depends on how you define better. The 89 EMA is more profitable than the default settings that I just described, 10 and 40, over time against the baseline. Okay, you take a lot less max loss days, which for some people is a more important consideration. And the reason is that basically what's happening here in this kind of action, all right, is that the outcome is much more random when you start going sideways like this. And so if you're trying to, one of the things we try to do is reduce the randomness. because when the market's chopping sideways, you really have no idea what's going to happen next. It's just like it's like the roll of the dice. All right, and so it becomes a question of, for the period of time that you're analyzing, which one worked. How many of these random occurrences of a break in one direction or another did you take that you didn't take with the chop avoidance method? Okay. I don't have a conclusive answer, because I've only tested this chop avoidance using the settings that I just described, 10 and 40, and it's the kind of thing where you have to do a grid search, and I try 10 and 30, try 8 and 30, whatever it happens to be, and zero in on what makes sense. Okay. But that's how this works. Okay. Now, no other questions. Okay. So let me get rid of some of this here. Hide that. No, not that one. And set angle. Okay. All right. This new spreadsheet does other things that are also new that we need to cover, and then I've got one question to ask. So you can see these dashed lines that then go solid, okay? And what they are is, there is a new study in the list that will automatically trail the stop to these pullback levels, okay? And the idea is that if you trail by a larger amount and then trail to the zigzag, you can keep yourself in moves better, okay? And so that study is here. It's called trail, shorts to zigzag and longs to zigzag. Okay, there it's at the bottom. All right, and so what will happen is, if let's say you have let's say you got in down here somewhere. Okay, you're in down here. All right, and you've given it a big trail, like a 40 tick trail. When this point gets set, then the system will move the stop automatically to that zigzag level. Okay, so let's make this yellow. And then to the next one. And then to the next one. And then the next one. And it'll just keep doing that as long as your natural trail doesn't take you out sooner. Okay. Now you'll notice that, like on these pink trail lines, it starts off with a dash and then goes dark. It starts off with a dash and then goes dark. But up here, like these blue ones they're light, and like this one here, you don't see it going dark. And the reason is that we only want to trail in one direction. So if I'm long, I want to trail to a zigzag that's higher than the previous one. So if it's possible that the pullback will happen, like this is the level right here. It's possible this pullback will happen and take you all the way through there and then go up. Okay, and so the way that the system works is you have to identify that, okay, I have a higher low that I want to trail to for a long. I'm not going to move the stop away from price. I'm not going to move it further away. So that's why you see these go dark, because they go, okay, now I know that I'm now at a level that is higher than the previous one for the longs. Whereas these here, if I'm short from up here somewhere, then that trail level is higher than the previous one. I don't want that. I'm only interested in trail levels that are lower. So I want a trail. I don't want a trail to here and then move my trail back if I'm short. I only want to move it in one direction, down, down. The next pullback level is higher than this one, so that's why it's light dots and it doesn't go dark. That helps you visually see that I'm not going to trail to that level. That's a higher high. I only want to trail to lower highs for shorts. Okay. And you can turn off these if you find these are confusing. You can just turn them off, but they help you understand where am I going to trail to. Okay. Now a question is, well, but the level is set right there. Why is the line drawn there? And because we need to specify, well, how far away do I want to be from that level? All right, and so that's in the spreadsheet, and that's this number right here. Zigzag trail offset. So the system will automatically trail to whatever the pullback point is minus that number. Okay, so if I want it closer, let's go one tick. And you'll see them all change here. So let's go back to here. Now when we recalc, they're all going to move closer because they're currently 3 ticks away. So let's recalc. And you'll see them, they all tightened up, right? So I gave it 3 ticks because I've seen the market nick these levels by a tick or two, and then that would be really irritating to get taken out. All right. You could also go the other way. Go 10 ticks out. And if we recalc this, we'll see. They'll all move out now. Okay, so you can control how close to that point do I want to trail to. All right. Sorry, let me go back here. If you don't want to trail at all, then just set this number to huge, and it'll never come into play. Just make it 1,000, and because it'll never be closer than the system will never move the stop further away from price than where the stop currently is. Okay, so before I do that, let me make sure that that's clear. In the study that we're using, we specify that we'll only move the stop in one direction. Okay, and so if the stop is currently, if I'm long from down here, and the stop is currently here, okay, and I've got some automated system that says move the stop, and the stop level that it wants to move it to is here, it won't do it. It's not allowed to move the stop in this direction. This is a long trade. We can only move the stop in this direction. All right, so if my automated system says move the stop to here, it just doesn't happen because it violates the rules. If instead my automated system says move it to there, well then okay, it'll just move the stop to there because that's in this direction. We'll only move in that direction. Okay, so your natural stop is going to, if your trade's down here, your stop's going to be at this point. When you get to scratch, it's going to be, say, right there. And if you don't want to use the zigzag system, then just set that number to really big. Whoops. Set this number here to really big. In other words, 1,000 ticks away. 1,000 ticks away from each point. So you'll never have a case where you could legally move the stop because you're still moving it in the right direction. That would be a way to do it. The simpler way is just delete the study that's doing that work. So I'll show you that in just a moment. In any case, almost all of you want to use this. So just decide how far away from that point you want to be, and the system's just going to automatically trail to it. Many of you are using stops that are tight enough that you'll never see it happen because all the pullbacks are more than, if you're using a 20-tick stop, then usually that your trailing stop is going to take you out before these pullbacks complete. This trail to the zigzag was created for the auto add system, which is not quite complete yet. Okay. The studies that do this are here. Trail longs to zigzag and trail shorts to zigzag. So if you didn't want to use them, just delete those studies and then that would go away. In fact, is there a setting in here? Oh, you can just disable it. Just say no. That's an easier way to do it. Okay. Note also that this will only work if auto trading is enabled. If auto trading is not enabled, that study doesn't work. All right, that's a requirement. This is called trade management by study. Okay, and so what it's doing is it's referencing a spreadsheet cell to understand, well, where should I move the stop to? Okay, so all the work is being done in that spreadsheet cell. All right, and here's where it says only modify stops in one direction and longs only. So this is the trail longs to zigzag. Okay, and trail shorts to zigzag. There's two of them because the calculations for where to move the stop are different, and so they're referencing different cells in the spreadsheet. If you're curious, they're referencing trail ZZ is zigzag, trail ZZ short, and trail ZZ long. So those studies are looking at this column to figure out where to move the stop. Okay, for those of you that are more technical. All right, there's one other feature. Any questions? No. Okay, there's one other feature that's in this spreadsheet that I've seen a need for, some of you have asked for, and that is this max trade loss. Okay, so currently what happens is the spreadsheet the spreadsheet study for trading, the auto trader, it will look at your closed P&L, which is somewhere, and it'll say if the closed P&L is if you've taken a bigger loss than this amount in the max daily loss gain, don't place any more trades. Okay, and this is how we enforce our daily loss limit. All right. But sometimes we have seen cases where we place a trade and something happens with the stop. The stop's not placed correctly, or it gets canceled somehow, or some just weirdness goes on. There's some technical glitch happens, and we end up in the market without a stop, and that's absolutely unacceptable. But we've seen it. I know of one case where it will happen for sure, and there's other cases where it has happened, and I couldn't quite figure out how it happened. All right. So what this does is this says there's another cell on the spreadsheet that's looking at the open P&L, the open profit and loss. It's looking at that cell. That cell updates every tick and specifies how much is the current trade, the current position, up or down. If that cell, if the current trade is underwater by this amount or more, the spreadsheet auto trader will automatically flatten it. It assumes something's wrong and will flatten it. So this number here needs to be more than your normal stop amount for the number of contracts you're trading. So I trade one contract using this system with a 10-tick stop. That's $50. So I put in 60. If my open position is down $60, something has gone horribly wrong. Flatten the position. Okay. I especially need this because I'm also doing development work that sometimes doesn't work like I expect. But for just regular people, there are legitimate times when you place the system places its stop and it's rejected by the servers, and so now you're in the market with no stop, and this is protection for that. All right. So max trade loss. Not to be confused with the daily loss. Okay, daily loss looks at closed P&L to make a decision on whether or not I will place another trade. Max trade loss looks at the open P&L, and if you've lost more than is listed here, it will flatten the position. Okay. Now, we're just about out of time here. There's one thing to understand going back now to this auto chop, avoid chop system. Let me set this back to what I'm used to seeing. This is currently implemented in the spreadsheet. It's these cells over here, okay? And it doesn't. The spreadsheet's really powerful. I can do things with the spreadsheet that I could not do otherwise, like trail to the zigzag. I could not do that without the spreadsheet. But this particular thing I developed in the spreadsheet. This chop avoidance I developed in the spreadsheet. And when I got done, I realized I don't actually need the spreadsheet to do this. I could do that using just normal color bar by alert conditions in Sierra chart. And the reason that's important is that the spreadsheet only has a certain number of rows. Okay. I think it's 500. Okay. So this has 500 rows, which means it only goes back 500 bars. So if I go back further in time, my chop avoidance is not shown there because I'm more than 500 bars away from the end of the chart. And I kind of don't like that. I'd like to see that chop avoidance all the time, not just for the last 500 bars. All right. And so if you're doing historical analysis, it becomes it's a real pain. You have to run a replay to see it. All right. So if like this is June 8th, and I'm way more than 500 bars away from the end of the chart. So in order to see the chop avoidance and do any kind of analysis on it, I'd have to run a replay for this day in order to get it. And that's a real pain. All right. So one of the things that I was doing before actually this session today was writing that color bar by alert condition so that I can use it without needing a spreadsheet. All right. And so I'm developing it. You can see the orange bars. This is the chop long. Every bar that's in the chop long is orange. This is just part of how I develop it, right? And so I'm gonna be changing it. Is my point here? The point I'm getting to, so that the backgrounds are colored not by the spreadsheet but by this color bar by alert condition study, which is not restricted to the number of rows in the spreadsheet. And the question is, do I release what I have so you guys can use this and then release again once that's done and tested, or do I make you wait? And I would like to hear your comments, because I can't. That's a big change. I can't swap out the spreadsheet based chop avoidance system for a color bar by alert condition based chop avoidance system without significant testing. All right, which means it's another week before you would get it. So, what do you think is the question? It's not that difficult for me to do, but it has to go through a full set of tests. I also have one slight improvement that I think I can make, which I'd like to do, and which also needs testing. I've got one Larry saying wait, and the other Larry saying don't wait. All right. All right, so here's the deal. I'm perfectly happy releasing what I have. And then if you want to use it, you can. If you don't want to use it, don't. That's easy. But I don't want to spend a lot of time on support if it's related to chop avoidance, because I'm just going to replace that. All right, so I'm perfectly willing to put it up there and you can download it and use it. But if you have questions and you don't understand how it's working or something like that, I can't spend too much time supporting it, since it's just going to be thrown away in a week. You promise not to ask questions. So the people that are saying wait, you just don't download then. What is Clint saying? Don't wait, I can wait. Do the task with the spreadsheet. I don't understand, Grass. What do you mean? Do the task with the spreadsheet. Now, while I'm waiting for that answer, make sure you guys do download the current version. Help download current version, because a new DLL went up yesterday. All right. Okay, so here's what we're going to do. We will... I'll go ahead. I'll put this set of this chart book and spreadsheet up, and you can use it. You can download it if you like. If you don't worry about it. I won't do any significant support at all for chop avoidance. The other possibility is that next week, in addition to releasing this new, the better color bar by alert condition based chop avoidance, we may have the auto trading fixed by then. I'm sorry, the auto adding fixed by then, and so that'll all release at once. The other thing I want you to notice here, if you look on screen, okay, let me turn off the short side so that you can see clearly what I mean. How do I do that? That's in here. Give me just one minute here, and we'll finish out. So I'm going to temporarily turn this off, okay? So we should only see, you can only see the, don't get long, okay? And what I want you to do is compare the background that the spreadsheet is drawing with the orange bars. So the color bar by alert study, I just said color the bars because it's a very convenient way to do it. You'll notice that it's one bar sooner. This is what I actually wanted originally, but couldn't do in the spreadsheet because the current row of the spreadsheet doesn't complete until the bar completes, and then it's not the current row anymore. So this is another reason why I want to do this, but it's also another reason why it needs more testing, because this is actually going to shift by one bar, and it's possible that has a significant impact. So that's why it needs testing. Okay. All right. Okay. So then, when the models go out, I'll also upload this chart book with spreadsheet. They'll be in their separate download sections, and then make sure you've downloaded the latest version, and then we'll proceed with the current plan for the chop avoidance. I'm still working the auto add bug that we have. It happened again to me on Friday. I could not figure out why. I also sort of screwed up the logging, so that's kind of my fault as well. But there's very clearly something wrong with the the mechanism that we're using to, or I'm trying to use, to cancel unfilled orders when we add the complexity of automatically adding to the position. Okay. When was the last time I released new chart books? I don't know, 4 or 6 weeks ago. Not that long ago. And John, you were having a problem with your spreadsheet for some reason, but we can resolve that pretty easily. We can take care of that offline. So if you know the answer to the question, why are you asking, John?